Tyler, a lot's happened with Plug Power. They've got their annual business update next week. We just saw on January 17th, they filed a prospectus to sell stock at the market. There's a lot investors need to know about and a lot they need to be looking for when we do hear from Plug Power next week. You ready to talk through it?
It's been a busy week. Let's get caught up here.
It is time. I'm Jason Hall. He is Tyler Crow. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link, fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. Be sure to check that out. Tyler, first, let's look back in time a little bit. We've been following Plug Power for years, two of us, over a decade at this point.
Longer than maybe either of us really want to, but okay.
That's true. If there's been like one continuous theme that we've seen through this company, because I think a lot of times it shows up in the news because hydrogen is really compelling and the idea of this low carbon fuel, hydrogen produced from renewable energy, zero carbon energy like wind and solar, part of the future of low carbon energy is really compelling. But the thing is, this is a company that has spent 20 years, Plug Power has been selling some version of the story of how they're going to be the next thing in energy. And none of those things have ever turned into a cash flow generative thing. And we've seen some of the most recent story around this shift into hydrogen instead of being produced from fossil fuels, hydrogen being produced from renewables. Like this has been like the core foundation of their growth story over the past few years. We've seen that start to unravel. And late last year, they, in their third quarter results, I believe it was, they included a going concern notice, basically says we don't have the resources either existing on our balance sheet now, access to capital, committed capital, or future cash flows to guarantee our ability to survive as a going interest for the next 4 quarters, right?
Yeah, it's in part because, like we've said, a lot of the operations that they have been doing have been at a loss. But then we can also add on to the fact that in the last couple of years, they have aggressively pursued not just hydrogen fuel cells, but also hydrogen electrolyzers, which basically is the kind of the renewable alternative to creating hydrogen gas as an industrial gas versus the traditional method that we've used for decades, which is steam reformation, a natural gas process. And plowing all of that additional capital into these electrolyzers has basically seized up their cash and put it all in inventory and working capital and things like that. And that's part of the reason why they issued this going concern notices. We have a bunch of capital tied up in all of this new assets, inventory, all these other things that we've done, and we haven't been able to convert any of that inventory to cash. And so when our bills come due, we're going to have some issues. And hence the going concern, we need to raise cash to pay for these bills until this stuff becomes profitable in theory. And that kind of brings us to what we saw this week with the issuance of a prospectus to raise some more cash.
Yeah, so they issued the prospectus, which is the SEC filing. And then at the same time, there's a supplement that they also released. I'm going to bring it up on the screen here. And Tyler, talk through a little bit about exactly what all this means.
Plug Power is doing a secondary offering on the stock market at the market issuance. An at the market issuance basically means that they don't have any current investors lined up to actually do the secondary offering. That's how, when you hear of like a bank getting involved to do the book running for an offering of stock, that's typically what that means, is the bank goes around and it drums up interest from investors who are going to buy the stock, typically at some sort of set price right around the day that it's going to be issued. An at the market issue basically means is that we are going to just issue shares onto the open market. In this case, for Plug Power, $1 billion worth of stock that's going to be issued by Plug Power that investors can buy on the market, rather than trading amongst themselves. And so
I want to be clear about that too. It's up to $1 billion. So the company is not saying we're just going to dump $1 billion of new stock onto the market next Tuesday. They're not doing that. The benefit of doing an at the market offering is you can do a little bit at a time, right? As they're looking at managing their balance sheet and making sure they have enough working capital to get from period to period, you can sell 1,000 shares, 10, whatever the number they choose to sell. They have the ability to be able to do that. B. Riley, right? Through B. Riley, managing that, they have the ability to raise small amounts of liquidity at a time as they need it, but also based on the stock price. Because one of the things that they put in here was the stock price was around $3 a share. When they filed this prospectus, it's about $2.53 a share as we record this on Friday, January the 19th. So the downside is you don't have a secured price. You get whatever the market bears, right? And it was pretty well expected when a company in the financial condition to Plug Power does something like an at the market secondary that the stock price is going to fall, right, Tyler?
Investors know that there's more stock coming, and so they're like, we don't need to buy, don't need to trade amongst each other. We got this extra block of stock coming in, and it's the expectation that, hey, we're also going to get diluted on any future profits that this company may make. And just to give a perspective, because this does matter when we're talking about open market securities, there wasn't a set amount of stock. It's $1 billion worth.
It's not number of shares, it's the total value that they can potentially raise.
So let's put this in a little bit of context here on why the change in stock price matters.
I'm going to bring up a screen that can put this in a round figure way to make sense. So when they announced the deal, the market or this agreement, the market cap for the stock was around $1.7 billion. The market cap is now $1.5 billion. So you'd be bolting another $1 billion in share capital on top of that existing amount. Again, assuming if the stock price went up $1 billion, you're still talking 40% dilution, right?
Yeah.
If it gained $1 billion from this point, you're still talking $40 billion, 40% dilution. The point is, if they raise $1 billion at this market value, it is going to be massively dilutive for investors. My guess, Tyler, and then I want to talk a little bit about they've got their annual meeting coming up, their fourth quarter presentation. They're going to talk through the results and their full year results and set the expectation to give us an update of what's going on. My prediction is that they're looking to use this just as bridge capital, as little as they possibly can, because it is so massively dilutive at this point. And they want to just bridge to get to the point where all of the things they've been dealing with supply chain that are tying up so much of their capital and keeping it from being liquid, from being able to actually sell stuff and start raising cash from their operations. My guess is that they want to just barely touch this as little as they can in the near term. But I don't think it's good news that they're doing this.
No, I'm going to put on my cynical hat of following Plug Power's patterns over the years. My guess is that lining this up, they're probably going to try to announce some really big negotiated deals with some very large company. They've put in an order for X amount of electrolyzers that looks like it's a really big deal. That's typically what happens here. They're going to make some huge announcement that wipes over some of the other maybe operational issues that they've had recently, try to drum up a lot of excitement for the company. It's been their MO for a long time, and then use this at the market equity issuance to raise capital at a significantly higher stock price. That's my best guess at what's going to happen. Again, that's me being a little bit cynical here in saying this is a pattern with this company, and so I would not be shocked if this is what happens.
Yeah, I think that's a fair way to think about it, Tyler. I want to say one other thing too. I don't think that the risk of bankruptcy is necessarily super high for Plug Power, even with that going concern notice. That's the biggest concern when you have a company that files a going concern, is they're going to be illiquid and they're going to become insolvent, and they're going to have to go through bankruptcy to reorganize the business and restructure it. The reason I don't think that's necessarily super high probability is because the company doesn't have a ton of debt. So you don't have debt covenants. They're not going to violate a bunch of debt covenants. And when you trigger those things, the debt becomes immediately due, and then you default on debt. And then all of a sudden bankruptcy becomes your only choice. Since they don't have a bunch of debt where that's a serious material risk, they've demonstrated the ability to tell the story, get some excitement, and then do secondary offerings like this to sell stock to raise cash in the past. They're probably going to be able to do that. I will say, as I have continued to say with Plug Power over the long term, investors should probably continue to stay away, because there has demonstrably been no long-term value created for shareholders. Even though the business has grown, even though they have found other markets, even though they've found this opportunity now with green hydrogen as the next leg up of their growth, none of that growth has ever turned into per share value, because they've always messed up the capital allocation, had to do things like this, and massively diluted investors. Again, we're talking about potentially 40% dilution in the current environment based on what they're proposing. I think investors should stay away. What do you think?
It's a long pattern of management promising a lot of things to its investors and very rarely delivering on that. And delivering on what a management says and execution, to me, is one of the most important things that you have to have out of a company. you can have the best business in the world, but if it's poorly executed, it's not going to generate capital for you.
I used this line on a video I did with our good friend and co-host Jeff Santoro, but I'm beginning to think that Maya Angelou would have been the best financial advisor most of us could have ever had when it comes to these companies. In her famous words, when somebody shows you who they are, believe them the first time. I think that applies here with Plug Power, and they've been showing us for years that they are great at destroying investor capital and not generating return. Maya Angelou said it best. Tyler, you said it second best, put me in third place. If you want to find some great stock ideas, check out our special link, fool.com/unscripted. Motley Fool's got 10 great ideas for you right there.